Are we live? Are we live? Y'all know I couldn't get up here without my lip gloss. Had to go find my lip gloss. What's up, y'all? Hey, hey, hey. Hey, financial besties. How you doing? How you been? Happy New Year. Happy New Year. What y'all been up to? What y'all been up to? I have been coasting into the new year. I spent the first few days, I'm gonna be honest, y'all, I ain't been doing much of nothing. I spent the first few days just relaxing and meditating and daydreaming. Can y'all see me okay? Is my lighting okay? Is my sound okay? Give me a thumbs up in the chat. But yesterday, I started trying to join the land of the living again. And I started the process of cutting the last cord with my prior employer. I am finally rolling over my retirement account to self manage it in my traditional IRA. And I don't know why, but I've been feeling a way about that. It makes everything feel so final. Kind of shared this on my private Facebook page already, but I'll share more with my financial besties tonight. But my life has changed so much since I resigned, and I want to talk about it. I want to talk about what has changed. I want to talk about how I got here. I want to talk about how investing made it possible. And more importantly, I decided to share this publicly on my channel because if it's something that you desire, I want you to know that you can do it too. But before we get started, let me say hi to my financial besties in the house. If you're watching live, drop some money babies in the chat. Y'all know, y'all know how much I love the money babies. And if you're watching the replay, comment replay gang and drop your money babies in the comments too. But y'all know, whether you're live or watching the replay, I appreciate you so much. In 2024, y'all gonna see me get real mushy a lot. Forgive me in advance, but I appreciate you so much. But if you are new to me, I decided to stream on both YouTube and Facebook tonight. So maybe we will have more with us in the chat tonight. But if you are new to me, hey girl, hey. My name is Malika. I'm a money coach and the founder of Fabulous Financials. I achieved financial independence by investing in the stock market. Then I quit my job. And since then, I have been living what I love. If you follow me on any of the socials, you probably have noticed that I use that hashtag a lot, live what you love, but it's not just a hashtag for me. It is something that I take to heart and something that I live in real life. And for now, what I love is slow travel. And I love coaching my financial besties. So when I'm coaching, I help women like you learn how to invest and design your own path to financial independence so you can live what you love. And on this channel, whether you're on YouTube or whether you're watching me on Facebook, I mainly talk about investing, personal finance, and the journey to financial independence. And in this year, I'm going to talk more about life after achieving financial independence. So, if that's of interest to you, I invite you to join my tribe of financial besties. Go ahead and subscribe to my channel. If you're on Facebook, like and follow the page, or come on over to YouTube and subscribe to my YouTube channel and turn on that notification bell because that will let you know every time I upload a new video or go live, which I do on Friday nights at 7 p.m. Eastern. So, welcome. Welcome, new friends. Now, let me say hi to my besties in the house. I see my channel members in the chat with the money babies. What's up, Nina? What's up, girl? We we got Shalonda in the house. Yes. Oh, I'm so sorry to hear you have a chest cold. I hope you feel better soon. And we got Eileen in the house. What's up, girl? Working and planning your exit. Is that what you've been doing since the new year? Is that what you've been doing since the new year, sis? Working and planning your exit. I love that. I love that. Plan the exit, girl. Elle, hey, girl. Hey. Hey, Elle. Hey, Francis. I haven't seen you in a little bit. It's good to see you. Greta Cobb. Always a pleasure to see you, Miss Greta. And Sashana. Hey, Sashana. Thank you for the confirmation. Visuals are good. I'm trying to do a little better for y'all this year. I got some new lighting. Also got a little mic. I'm not using it though. I need to figure out how it works. But one of those little mini mics that make your voice sound like it's crisp and clear. Got a little mic here. I'll figure out how to use it next week. Or I may use it when I do some pre-recorded videos, which are coming up soon. I have some pre-recorded videos that need to be edited. Let's see, who else? The Chocolate Stew, Life of a Flight Attendant. That's a new name. I haven't seen you, but hey, girl, hey, welcome. I am happy you caught me live too. And thank you for watching. Yes, yes. Did I say hello to everyone? You have an appointment with a financial consultant next week. I got to gather up all the information. Okay, Elle. All right. I see you, sis. Do your thing. Do your thing. Ingrid. Hey, girl. Hey. Hey, sis. How you doing? Melissa. Hey, Melissa. Hey, girl. Hey. And Raven. Hey, Raven. I haven't seen you in a long time. I look forward to our next meeting coming up next week, I think. I'm excited. I miss you. I'm Monica. Hey, girl. Hey, yes, you finally caught alive. I am so happy to see all of you. My besties are back, and we got some new besties in the house. I love it. I love it. I love it. Yes, next week, Raven. Okay, cool beans. I have it on my calendar. I thought I saw your name. So that's cool beans. I look forward to that conversation. Have so much to share with you this year. But anyway, all right, let's get into it. And I will try my best not to be too gushy and too woo-woo tonight. But as you saw in the thumbnail or in the title, I want to share how investing has changed my life. But as I mentioned already, I'm rolling over my retirement account so that I can self-manage it. And I had to call my old HR department, and I had to call my broker to get the paperwork to find out exactly what's needed because I've never done this before. In fact, I was thinking about recording it in real time as I do it, or at least documenting the process in some way, because I really, really want to document this life after FI. There's so much information available about FI, about pursuing FI, about achieving FI. But it's like after people achieve FI and they retire early, they just go off into the wind. And I'm like, you know what? It might be helpful if I document my experiences in real time. I love sharing. I love helping you all that are still on your journey. But at some point, you're going to be on the other side. And I think this information will be helpful to you too. What do you think? Let me know in the comments. What do you think? But anyway, I'm rolling over my retirement account, a retirement account that I've been feeding for over 2 decades. So it's been a little emotional, but I haven't actually worked since May 2022. So what's that? 18, at least 18 months. But this move of rolling over my retirement account, it just makes it feel official, kind of. It's a little weird, but it makes it feel official. And I guess it's just hitting me because I've been financially independent for a few years, but I didn't resign until 2022. And even when I resigned in 2022, I did so like in the middle of a recession and or a looming recession, but definitely in the middle of a bear market. So there were so many other distractions going on. We had just kind of come out of the pandemic. So there's a lot of other things going on. And I really didn't have an opportunity to digest what I was actually doing and how it actually made me feel. And although I was and I only worked for 7 months of the year, I'll be honest, I still had that worker mentality, that grind mentality, where I felt like I needed to earn money and continue saving, even though I had spent all those years saving and investing so that I could retire and stop. But I still had that mentality, that earn money and save mentality. And because it was in the middle of a recession or a looming recession, I wasn't quite comfortable living on just my investments. The thought of it was kind of strange to me. I didn't know how to transition from being a investor to stopping my investments and now drawing down those investments. So I continued creating money through trading and also coaching. And I would live off of that money. And then I would also use that money to continue feeding my investment accounts. In 2023, things started shifting a little bit for me, but I'll be honest, not a whole lot. I was a little more intentional about trying to shed that grind mentality. I allowed myself to spend a little more. And of course, as you already know, I did a whole lot of travel, a whole lot more travel than usual in 2023. But the way I started the year wasn't very different. I still followed my usual routine of creating financial goals, of strategizing how to create more money, of planning my investments and planning my savings, all the things that I had done for years and years and years. It was like nothing had changed. And I still was hesitant to live on my investments. It sounds crazy saying it out loud. So for 2022, I didn't live on my investments. For 2023, I didn't live on my investments. So I still did things to earn new money. I was still trading, I was still coaching, although less, a lot less than what I did in 2022 because I was traveling a lot more too. Um, but I was still trying to make money, still had that grind and earn money type mentality. But at the end of 2023, and you saw all the videos that I created to help you all, review your finances and how to plan and prep for the new year. So I went through that same ritual, reviewing my finances, updating my net worth, reviewing all of my accounts, topping off any accounts that I wanted to contribute to, topping off my advised donor fund. That's the account that I use to invest to create money babies so I can donate to the causes that I love. So I still went through my end of year ritual. But what I did not realize and what actually surprised me when I finished everything is by then, like I said, I had not worked for 18 months. The value of my assets increased in 2023 by multiples of my annual salary when I was working a 9 to 5. In 2023, I did not work a traditional job at all. 2022, I did. I didn't leave until May. I didn't officially resign until October. But in 2023, I did not work at all. And my total net worth increased. And it's even higher today than the day I quit my job in 2022. And I share this not, I'm not bragging, and I know I'm not coming across that way, but I still feel like I have to say that because after this video is posted, I get a whole bunch of people in the comments watching the video that don't know me. Y'all know me. So you know I'm not bragging. I'm sharing this because I want it to be clear what investing can do for you. Not only was my money doing the work for me, I hadn't worked in 18 months. Even though I was trading and coaching, I scaled back significantly in 2023 because I was traveling. I traveled to 10 different countries, 10 different countries and 24 different cities in 2023. My money was doing the work for me and it was earning more. It was earning more than I did when I actively worked 40, 50 hours per week. I knew this in theory. I've been investing for years. I knew this in theory. But when you're still working, when you're still feeding your accounts, you're not really paying attention to the granular level of detail. Or at least I didn't. You might. At least I didn't. So I knew it in theory, but seeing it in reality while you're unemployed, I think that's the difference for me too. Seeing it in reality while I'm unemployed, it was an eye opener. My money created money babies and earned multiples of the salary that I earned when I was working 40, 50 hours a week. That's what I needed to see to shift my perspective. So when 2024 started and I was getting ready to slide into my rituals of goal planning and doing all the things to strategize how I was going to earn money for 2024, how I was going to plan my investments, how I was going to do all the things that I normally do. And I drew a blank. It's like every time I would sit down to start doing it, I, I, I couldn't. And I felt almost, how can I describe it? I just felt a shift. I started feeling like, okay, this is different now. So, like I said, I coasted into the new year. On day 5. I've been seeing people on social media already talking about 2024, wearing them out. They're exhausted already. They're burnt out already. And I'm over here like, I haven't done anything but daydream for 5 days. And what I've been daydreaming about, instead of planning goals and what I want to accomplish, I've been daydreaming about how I want 2024 to feel. I've been daydreaming about what I want to experience. I've been daydreaming about who I want to experience those things with. I've been daydreaming about how I can be more grounded spiritually. I've been daydreaming about what else God has for me in this life. What does He want me to do next? And the shift that I think I felt the strongest is whatever is next, it's not about me anymore. It's not about me anymore. So I know this might sound a little strange coming from me, especially as a money coach, but I have no financial goals for 2024. None. I have no financial goals for 2024. There will be one change though. All the things that I did in 2022, 2023, feeling like I needed to create money, earn money, invest money, all of that mentality that was still work related. After reviewing my portfolio and estimating the expenses that I anticipate for the year, I'm not doing any of that anymore. I've decided that in 2024, I'm going to live on 100% of my passive income. And this will do a few things. It will free up my mental space. So even though I didn't work a job, as long as I felt like I had to be trading, as long as I felt like I had to be coaching, it still takes mental space because I have to mentally prepare to do those things. So that will free up my mental space, not feeling obligated to do anything. It will free up my time, and it will free up the effort that I spend doing things that are no longer necessary so that I can lean into what feels more aligned and what feels divine, divine led. So that's where I am right now. Those are the changes that I've been experiencing over the past 2 years. And then the next thing that came to my mind was, okay, well, share how you got here. You want to share with the people how much things have changed? Share how you got here. So, how am I able to relieve the pressure of goal setting and planning and earning money? Y'all already know. It's on the thumbnail of this video, right? So, if I had to credit one thing, but no, hold on. Take that back. If I had to credit two things for the peace of mind and the freedom that I have right now, the first and foremost, is God's grace. I would not be where I am if it was not for God's grace. Y'all know my story. Y'all know I was a teenage single mother on welfare for almost 10 years. Y'all know where I come from. Y'all know where I started. So that's all. That's all God's grace. But the second thing is investing. Investing. And I laugh when this thought came to me earlier today. I said, I will preach the gospel of investing for the rest of my life. That is my ministry because I started my FI journey. Let me back up. Not even FI journey because I wasn't even aware of what FI was initially. But I started my financial journey from the gutter. I've been at rock bottom. But I started investing and I followed a very simple path to wealth. And I emphasize simple because you can't get any more simple than what I've done. But here I am, after 10 years on welfare, after being a teenage single mom, meeting all of the statistics, all of the things that they say single moms typically do. After all of that, here I am in my 40s. I just had a birthday. Y'all know, thank you for everyone that told me happy birthday. Still in my 40s and free. Time freedom, location freedom, and financial freedom in my 40s. After spending 10 years, the first 10 years of my adult life, in the gutter. And I share this because if you want to do this, I know a lot of people, they always say, I want to learn how to invest, but it's too hard. I want to learn how to invest, but I don't have time. I want to learn how to invest, but blah, 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 whatever the reasons are. If you truly want to do this, I want you to know that it is not hard at all. I want you to know that you can do this. In fact, I want to see more Black women free from the hustle and the grind. There are a lot of things that we do out of necessity, out of circumstances, because so much is riding on us, especially if you're a single parent. I get it. But there is a way to get free from the hustle and the grind. You do not have to work until you're 75 or 72, whatever. What is Social Security now? What age is it where you can draw your maximum Social Security? You do not have to work until that age and rely on the Social Security system, or work until you can no longer physically work anymore because your job has stressed you out so much. You got so sick, your blood pressure so high, your cholesterol so high, and you're so stressed out. You got to retire through disability retirement. You don't have to do it that way. Now, I say it's simple, but it isn't easy because it requires you to think differently and to do things differently than what you're currently doing. That's what makes it difficult. But the process, and I'm going to share it with you tonight, the process to get started is so ridiculously simple. It is called the simple path to wealth for a reason. It's so ridiculously simple. If you are not currently investing and you want to start investing so you can get on a path to financial independence, you can do it. I promise you, you can do it. I promise you, you can do it. So, do you want me to share with you how I got started? Let me know in the comments. Do you have any questions about anything I've shared or anything along my journey that you want me to answer for you tonight? Because I may not cover everything, but if you have questions, I do want to cover that too. Okay. Let me know if you have any questions about my journey, anything about investing that I may not already cover. I want to be able to answer all of your questions because when I log off this live tonight, I want everyone within the sound of my voice, whether you're live or watching a replay, I want everyone within the sound of my voice to know that they can start investing if you aren't already, or even if you are investing, I want you to also know that you can achieve financial independence. I know some people think, oh, it's such a lofty goal, it's such a big number, I can't do it. Yes, you can. You can too. And I want everyone within the sound of my voice to know you can do it. And I also want you to know how you can do it. So I see a couple of yeses. All right, let's get into that. how I started. How I started. The very first thing I did, other than learning, of course. In the last video, I shared with you all my mentor, my coach. And before we close out tonight, I'll also give you an opportunity to work with me if you want to work with me to also learn. But assuming you've done that already and you're ready to get started, the very first thing I did is open a brokerage account with Vanguard. My first real brokerage account, and I say real because I did the little gambling thing at first too, where I was just buying random stock and I was just hoping and praying that they would go up and I would make a little bit of money. I didn't know what I was doing. I was gambling. I was not investing. If you're doing that, you're gambling. You are not investing. So when I opened my first real brokerage account, it was with Vanguard. And if you don't know, a brokerage account is similar to a bank account, but it's not. It's not the same as like a checking or savings account. It's similar to a bank account, but it's the type of account you need to invest. And they call it a brokerage account because your broker, the owner of that institution, is your broker, and your broker acts as an intermediary between you and the stock market. And I chose Vanguard for several reasons. Number one, because they're like the granddaddy. They're the most established, the most trusted, and the most renowned of all of the brokerage firms. The second and main reason that I chose Vanguard is because they are known for being the market leaders that have established what is now considered low cost funds. So while it doesn't cost you a dime to open a brokerage account, it does not cost you a dime to put money in the brokerage account. But when you invest, when you're buying funds like index funds, and those are mutual funds or exchange traded funds, they have a fee embedded into them called an expense ratio. And Vanguard has historically established themselves in the market as having the lowest cost expense ratios for their funds. And on average, most of their expense ratios are usually less than 0.05%. And that's, y'all know I don't do mental math, so I'm picking up my phone for a minute. So let's say you invest $1,000 into a fund and you're paying 0.05% in an expense ratio. You're paying 50 cents per $1,000 that you invest in Vanguard's fees. The market average for an expense ratio when you're investing in mutual funds is about 1%. Vanguard's expense ratio is 0.05%. So not even 0.10%. It's half of that. And the market average is about 1%. So I chose Vanguard because they're known for their low fees. Now, since Vanguard has established themselves as the market leaders, of course, other brokerage firms have come out with other types of pricing structures to compete with Vanguard. But by then, I already had my portfolio with them, and I'm not interested in chasing little nominal differences in fees. So my first account was with Vanguard, and that is where my first account still resides. That's not the only place I invest in, but that's where my very first account still resides. And when I roll over my retirement account, remember that's how I open this live. I'll let you know what I'm doing. I'm rolling that over into Vanguard. Right? The second thing I did, and I see your questions, I promise I'm going to circle back to answer your questions. If you ask a question, can you put a Q in front of it so I can make sure I see it quickly? But the second thing I did when I first started, I started investing in mutual funds. And if you don't know the difference between mutual funds and ETFs, I have a video on my channel already that explains the difference between the two. I started investing in mutual funds. The reason why I chose mutual funds is because mutual funds are easier to set up an automatic investment plan. And what that means is you can send money to your brokerage account and it does not just sit in your settlement fund. You can tell your broker to automatically invest it in the mutual fund of your choice. You can't do that with ETFs. So I wanted to automate my investments. I wanted to remove myself from the process. I wanted to reduce my decision making fatigue. So I wanted to simplify the process as much as possible and automate as much as possible. So I started by investing in mutual funds. And that's because I wanted to set up an automatic investment plan. Okay. The third thing I did was I invested consistently using a strategy called dollar cost averaging. I invested consistently using a strategy called dollar cost averaging. And what that is, that's very simple also. It's the big term that the finance bros try to use to make everything seem so complex. I promise y'all, investing is not complex at all. But dollar cost averaging is basically investing a fixed amount at the same interval every single time over and over again. So for me, what that looks like is I set up an allotment through my payroll office. Again, removing myself from the process, removing any decision making that I have to make. I didn't want to say, "Ooh, I got to remember at the end of the month or every time I get paid, I need to send this amount to my brokerage account." I wanted to remove that decision making from the process. I set up an automatic allotment through my employer's payroll office, filled out the little forms, gave them my account number to my Vanguard account, and I had my payroll office automatically send a fixed amount of money to my brokerage account every pay period. So let's say I started off investing, let's say $200 per pay period. My automatic allotment before I would even see the money, it's just like a direct deposit. Your direct deposit goes directly to your checking account. I had $200 automatically going directly to my brokerage account. $200 that I never saw. If I didn't see it, I wasn't tempted to spend it. It went automatically to Vanguard. And because I was investing in mutual funds, step number 2, I was on an automatic investment plan. So when Vanguard received that $200 from my employer, Vanguard knew exactly what to do with that money based on the automatic investment plan that I had set up with them. They knew to take that money and to buy more of that mutual fund that I chose. Everything was automated. Everything was automated. I got paid. Employer sent $200 to Vanguard. Vanguard would take that $200, buy this mutual fund every pay period, over and over and over and over. The fourth thing I did, and this is the final thing I did. This is how I got started. I'm just sharing with you how I got started. I reviewed my account probably about 2 or 3 times per year. I set it to bake, but I did not forget it. I do not believe in set it and forget it. No, ma'am. No, ma'am. No, sir. Money that I work hard for, money that I'm investing, I need to see to make sure it's doing what I want it to do. Because the problem with the set it and forget it mentality, let's say you were one of the unlucky investors that invested in Lehman Brothers or invested in Rivian or invested in, I'm thinking about all the companies that were really popping on and popping. They were really popular. And then just suddenly they just flopped and the stock tanked. They went from the highs, the all-time highs, and just smacked the flow. You ain't about to catch me slipping like that. Mm-mm. I did not check my accounts frequently. I'm not suggesting you do that because seeing the normal gyrations of the stock market, seeing the normal fluctuations, and you're watching that too often, that can lead to emotional decisions. Emotional decisions that I promise you will regret. I'm not suggesting that, but I set it to bake, but I did not forget it. So I checked my account about 2 or 3 times a year. Now I check my long term account probably about once a quarter. So now about 4 times a year. But I checked it a couple of times a year because I wanted to see what my money was doing and how my account was changing over time. And also because I continued learning. I continued learning. And as you continue to learn, you will learn more advanced, more sophisticated ways of investing. And you may do things a little differently the more you learn. But these 4 things that I just shared with you today, they are the things that you can start right now. You may not be able to get on the phone with your HR department or find the form, to set up your allotment, but you can open your Vanguard account. You can do that right now. These are things you can start right now. But I also encourage you to continue learning so you can continue advancing. I will always say continue learning, right? So, with those 4 things that I started today, because of those 4 things, this account that I'm talking about is my largest account in my total portfolio. It's my largest account in my total net worth. Yes, I do other things now. Yes, I do more advanced things, more complex things, more risky things now. I have other accounts. But this one account that I'm talking about, this one account that I'm sharing with you guys, this is my largest balance account in my total portfolio. It has done more work for me than any other account that I actively manage. It has created more money babies for me than any other account that I have. And that includes my trading account. As I always say, trading creates income, investing builds wealth. Right? So you can start investing now and grow a portfolio that will create money babies and passive income for you too. This is how I'm able to live on 100% of my passive income to pay for all of my expenses that I anticipate in 2024 because of these 4 things that I did years ago. And these are 4 things that you can do right now. Notice I didn't say how much you should put in there, how much the allotment needs to be, how much you need to invest, because there are no rules that says that. That is totally up to you. It's totally up to what you can afford. The more, the better, but it's totally up to you. As I mentioned, when I'm coaching, I help my clients design their own path to financial independence. It does not look like mine. Our lifestyles are very different. So the details are totally up to you. But the framework is exactly the same. Everything I just shared is exactly what I teach. It's, top level what I teach. I have clients that's in the chat right now. Am I lying? Isn't this exactly what I teach? With more detail, of course. But this is it. This is how I'm able to decide I'm not obligated to do anything this year. And frankly, I probably won't do anything unless it feels divinely led and I feel aligned. I am only going to do this year what God leads me to do. Even if I don't know how to do it, even if I don't feel equipped to do it, I feel like if he leads me to do it, he's going to make a way and he's going to tell me exactly what steps I need to take. And I'll just figure it out. But this year, I have no goals. I have nothing that I desire for myself. I just want to be aligned and I want to lean into the things that I enjoy, right? So if you're picking up what I'm putting down and this information is helpful to you, please like this video. If you haven't already, hit that like button. Hit that like button, please. And share. Share the video with other women you know who desire financial independence and peace of mind. This peace of mind is priceless. It is so priceless. I can't even explain. But let me check the comments for the questions I saw. I'm sure there's a way to search for cues. Haven't learned that yet. Nina, what country and city are you in now? I'm in the United States. I've been home since the holidays. I am in the US of A. I'll be here for a couple of more weeks before I head out again. I'll do another video to share my travel plans for 2024. But yeah, I'm headed out the end of this month. Let's see. If someone has zero investments, what is one thing they should do all year? Something small but powerful to do this year. Those 4 steps I just shared. They're very small. They're powerful and very impactful. If you have zero investments, if you are starting from nothing, do those 4 things. And I promise you, it won't happen overnight. I don't teach anything get rich quick. I don't do none of that. If you're looking to learn how to get rich quick, if you're looking to learn how to trade, if you're looking to learn how to make money fast, I ain't the person for you. I don't know nothing about that. I don't know nothing about that. What I know about is how to build sustainable wealth. How to build sustainable wealth that can create freedom for you and assets that you can pass on to the next generation, because you'll have so much that you'll outlive your current assets. You'll have so much that your money babies will grow faster than you can spend it. Y'all saw my year 1 review. I went to 10 countries. I spent $35,000 on travel. My portfolio grew multiples of my salary. Investing is the most impactful thing you can do. The earlier you start, the sooner you start, the better. But even if you're in your 40s, even if you're in your 50s, it's never too late. They say the best time to start is, what is it? How does saying go? The best time to start is yesterday, but the second best time is today. Get started. Start investing. That's the one thing I would suggest you do this year. And what you should do all year is continue investing consistently, whatever amount you can afford. Automate it so you're not thinking about it, so you don't have to remember to do it. Set it to bake, but don't forget it. Yes. Remy said, tell us the tea, girl. I was late. Do you invest in ETFs? I do. I invest in ETFs. I invest in, the account that I just shared, that is mostly mutual funds, not ETFs. That's mostly mutual funds. In let's say my HSA, for example, I have a health savings account and I invest those funds as well. And I invest in different sector funds. So there are 11 funds in the S&P 500. 11 sectors in the S&P 500. And each sector has different companies that do different things. And I love the technology sector and I love the healthcare sector. So in my HSA, I have ETFs that I invest in the sectors that I like the most. So, yep. Let's see, why Vanguard? We talked about that, and not Fidelity. I actually do have an account with Fidelity and Schwab, but the example that I gave tonight was Vanguard because that's where I started. That's where I started. But I like Fidelity too. I like Schwab too. But I started with Vanguard. Let's see. Can I have more than one brokerage firm for investing in a Roth IRA? Can I have more than one Roth? Yes. You can have as many Roth IRAs that you want. However, that little entity that Uncle Sam worked for called the IRS, the Internal Revenue, they establish the maximum amount that you can contribute to your Roth IRA. And for 2024, how old are you, Nina? Are you over 50? 2024 IRA limits. I think it's $7,000, but let me double check. Yes, I wanted to double check before I told you. So for 2024, the maximum you can contribute to an IRA, that's either a traditional or a Roth, is $7,000 if you're under the age of 50 and $8,000 for those who are 50 or older. So let's say you have two different Roth IRAs at two different brokerage accounts. That's perfectly fine. But the total combined from both accounts that you contribute in 2024, if you're under 50, cannot exceed $7,000. If you're over 50, if you're 50 or over, it cannot exceed $8,000. So let's say you're over 50, you can put 4,000 in one and 4,000 in the other. Yep. If you have four accounts, you can put 2,000 in all four of them, but the total combined contribution cannot exceed the IRS mandated limit. Okay. Let's see what my bestie Eileen talking about. That's what I've done with my brokerage account right now. It's 5% of my paycheck. Okay. So you have it coming out automatically from your employer? Cool beans. That's the best way to do it. That way you don't have to remember to do it. Or that way, if you're tempted, let's say you have a month where your expenses are higher than normal, or you have an unexpected emergency, you're not tempted to spend the money that you were going to invest with. If you have it set up through automatic allotment, the money's already gone. It's already in your brokerage account. So you can't be tempted to spend it. It's already spent. So I like automatic allotments and automating my investments so I don't have to think about it and so I can get out of my own way. Get out of my own way. What funds are you invested in? I'm in the S&P 500 looking to invest in dividend ETF SCHD. Now, Simone, I do not share exactly what I invest in, only because I do not want anyone to be tempted to follow what I'm doing, and your risk tolerance may be different from my risk tolerance, right? So I do not share what I invest in because I don't want to influence your investments. Now, let me add a caveat to that. If you are in my coaching program, we do have more intimate discussions. And I think in the last cohort, I think they challenged me to something. They asked something, and I had to pull up my account and share it. They wanted me to demo something. And when you're coaching with me, anything you ask me to do, I'm going to do. But I do not tell anyone what to invest in, and I do not share what I specifically invest in because I don't want to influence your investment decisions, and you end up possibly losing money because your risk tolerance may not fit my risk tolerance. So that's the only reason why I don't share. Not that I'm gatekeeping or not that I do it because I'm a super duper private person, but our risk tolerances may be different. So that's one of the reasons why I don't share that level of detail. But if you ask the question a little differently and you want to know what I think about SCHD, that's a dividend fund, I may answer that question, but ask it differently. Yes, continue learning. Even when you start investing, even if you're already an investor, continue learning. There are levels to this money game. Y'all hear me say that all the time. There are levels to this money game. And the more I've learned, the more I've been able to grow my portfolio. I think the stock market returned this year. 2023 was beautiful. I think the stock market returned this year about 24%. My portfolio was up 77%. So, yes, continue learning. There is value in learning. I hesitate to say knowledge is power because you can have all the knowledge in the world. If you're not applying it, if you're not executing what you know, it's not really making a difference. Continue learning and applying what you learn. And if you coach with me, my clients are used to it now. And I've learned how to present it in a way to make it more fun now. So I've gotten better over the years. But if you coach with me, there are action items. There is a lot of homework because I don't want you to walk away from my coaching program and say, "Oh, I don't know how to do that. Oh, she didn't show me how to do that." You will learn and do. You will learn and implement in real time. That's why the program is 8 weeks long. But I'll tell y'all more about that later. But yes, continue learning, please. Shalonda says she opened her Vanguard account with $1. Good point. Thank you for sharing that. Remember when I said I didn't say about how much you should invest, how much you should put in there because it's totally up to you? Same thing with how much you start with. Totally up to you. Now, I will say this one thing though. If you choose to start with mutual funds, like the way I did, mutual funds do have a minimum investment to get access to the fund. But once you have access to the fund, you can do your automatic investment plan, your automatic contribution with any amount. You just have to meet that minimum first to gain access to the fund. And I believe most of Vanguard's mutual funds, they've lowered them a lot in recent years. They used to have tiers of fund, like regular investor fund, then they had the Admiral fund, then they had like another higher level fund. But I think now they've lowered a lot of the tiers and the minimum investment may be $1,000. I'm just guessing. I don't know what it is now. Like I said, because once you gain access to the fund, you can contribute any amount. You can contribute $5, $10, $20, $50. Very, very small amount. All you got to do is get access to the fund, set up your automatic investment plan, set it and let it bake. But yeah, you do not need a lot of money to start. But if you choose to invest in an ETF, you don't have to meet that minimum. So I'm just sharing that additional information with you because I started with mutual funds. Let's see. I see Elle in the comments answering questions. Thank you, Elle. Thank you. Thank you. Simone B, how much did you invest for FIRE? That's a great question, Simone. When I first started, I was investing about $25 per pay period. I was investing about $25 per pay period. I would say for the majority of the time I was investing, I got up to about between 20 and 30% of my income I was investing. My goal the whole time has always been about 50% of my income. I don't think I got to investing 50% because also simultaneously my income was increasing as well. Y'all, anybody that know me know I was very aggressive about my career and increasing my salary. But the latter part of my career, I got to about 50% investments. And I mean, 50% of my salary was going into my investments. And during the pandemic, because we couldn't do nothing. And I was one of those people. I wasn't hanging out at my girlfriend's house and we just sit outside and talk. I was strictly 100% quarantining. I wasn't about that life. I ain't go nowhere for like a year and a half. So during the pandemic, I actually got up to about 75%, but that was for a very short period of time that I was investing about 75% of my income. But for the vast majority of the time when I was pursuing FI, I was investing about 20 to 30%, but my goal was to get up to 50%. That's most people's target on their FI journey, to get to 50% ultimately. But yeah, great question. So if the max, oh, y'all still talking about the Roth. All right. Trey, how do you invest your HSA money? Um, so when you have an HSA with your employer, in order to be eligible for the HSA, you must also have a high deductible health plan, an HDHP, in order to be eligible to contribute to the HSA. So when you open up your HSA that's tied to your HDHP, it's usually associated with your employer sponsored HSA manager. I think that's what they call it. And they usually have like a minimum amount you need to keep in cash, because the real purpose of HSA is to have money that's set aside to pay your deductible or to pay for your healthcare expenses. I've always invested all of my HSA because I didn't have a lot of healthcare expenses. And when I did, I could cash flow them because I wanted to use my HSA to build it up like an investment account so that when I'm 65, 75, and my healthcare expenses are higher than what they are now that I'm young and healthy, that's when I want to be able to access that money. So, with your employer, the HSA manager requires you to keep a certain amount in cash and will only allow you to invest the amount that's above and beyond that cash minimum. What I did, I opened my own HSA, and that's the account with Fidelity. I opened my own HSA. So when the money will come out of my payroll, out of my check to go into my HSA account, my employer will also contribute what was called an employer pass through in my HSA account. When that money posted, because I didn't want to be held, I didn't want to be bound to the rules of my employer sponsored HSA plan. When that money posted, I would transfer it out. As long as it's being transferred from one HSA to another HSA, you're not creating a tax event. So I would transfer it out and put that money into my self-managed HSA account, and I would invest it all in my Fidelity HSA account. And another reason why I did that, and this is one of the things that I recommend for my clients that I coach, so I'm giving y'all a little mini coaching session here, is because in the event you decide to switch from a high deductible health plan and you go back to an HMO or PPO, you're no longer eligible to contribute to your HSA, but the HSA money is still yours. If you are no longer eligible to contribute to an HSA, that HSA manager is going to start charging you a monthly maintenance fee. And whatever little balance you have in there, every month, you're going to start seeing that balance get lower and lower, even if you haven't used the money. So if you no longer have a high deductible health plan and your HSA is with your employer, double check your account to see if they're charging you a monthly maintenance fee. So by having my own self-managed HSA with Fidelity, they don't charge a monthly maintenance fee. I have transferred all of my balance over to my HSA with Fidelity, and because it's self-managed, I can do what I want with it. I'm not bound by the rules that my employer's account manager established for me. So that's the long answer to your short question, but I hope that helped. Let's see. So now that you're not employed, how are you handling your HSA? I kind of just explained that, I think. It's self-managed with my account in Fidelity. So now that I'm not employed and I'm getting ready to roll over my retirement funds will be self-managed in my account with Vanguard. So I self-manage everything myself now. I thought FSA was for medical expenses. That's a great question. That's a great question. So, an FSA and an HSA are two different accounts, right? The main difference, just remember this distinction. The main difference, an FSA is the account where you put money into, but at the end of the year, or I think they give you some grace period now. They let you go into a couple of months into the new year. It's the account where if you don't use it, you lose it. You cannot invest those funds. Those funds are solely for spending. It's a flexible spending account, right? And HSA is a health savings account. At the end of the year, there is nothing that you will lose. That money is yours, even if you don't use it. So that's the main distinction between the two. There's a lot more, but I won't get into it tonight. But both of them can be used for medical expenses. The other caveat is if you have a high deductible health plan and you have access to an HSA, you cannot access a regular FSA because IRS don't want you to double dip, but you can access what's called a limited FSA. And the limited FSA can only be used for vision and dental expenses. And all other health related expenses has to come out of your HSA. But if you don't have an HSA, the FSA does have like a boatload of things you can use the money for. But the main distinction, the FSA money, if you don't use it, you lose it. The HSA money is yours forever. And the HSA money can be invested. The FSA money cannot. Okay. Okay. Oh, okay. So you meant an HSA. All right. Yes, it has to be used for qualified medical expenses. But if you don't use it, it's your money. You can also invest it and use it later. Right? There are no timelines, no deadlines for when you have to use the money. The money goes into your HSA tax free. And as long as you're using it for qualified medical expenses, you can withdraw the money tax and penalty free. I just invested because I will need more money for healthcare expenses when I'm retired. Well, I'm retired now. When I'm older, when I'm a golden girl, when my, God forbid, I don't want to wish bad things on me, but when my health will require more medical visits, I should say. I don't need it now. So I don't keep it in regular savings now. I invest it. I invest it long term. Sadly, it's 7K. Oh, you're talking about the IRA, the 2024 limit. I opened one with my granddaughter today. Congratulations, Global Granny. Awesome. Let's see. Do you have an overall prediction for the S&P 500? Monica, I don't do predictions. There is no one on this earth that can tell you what the stock market is going to do. There are things that I can say based on historical data. However, even with that said, past performance is not a guarantee of future performance. So I stay away from trying to predict what the market is going to do. I can read charts and make a educated guess based on analyzing data, but to predict what the market is going to do for a whole year, nah, I don't do that. But what I can say is it's an election year. 2024 is an election year. So you can look at historical data to see what the market typically does during an election year when there's a Democratic sitting president. See what you find. Sometimes it's fun looking at historical data, but I caution you against relying on that, like hanging your hat on that and using that to make investment decisions. That would be a bad idea. That would be a bad idea. But it's good to know. It's fun to know those types of things sometimes. Yeah. Okay, look at Al in the comments answering questions. I see you, sis. All right. How do you decide What ETF to invest in? That's a great question. Let's see. How do I decide what ETF to invest in? I do a few things, and I go into way more detail about this in my coaching program. But one of the things I do, first of all, it depends on what my risk tolerance is. In my coaching program, I teach you how to evaluate your personal risk tolerance. And that is so important before you put money in the stock market. I know I just made investing look like it was very, very simple, and it is. But investing comes with inherent risk, and you need to understand what your personal risk tolerance is. Like, for example, it's one thing for me to say, I love the tech sector. The tech sector is very, very volatile because I know how to read charts. I know how to read the market. I have a stomach for risk. I'm okay if my portfolio draws down 10, 20, 30, 40%. I'm okay with that because I know what that means. I know what's going to happen. And if I'm invested in something that I truly believe in, I'll double down on it. But you may not have the risk tolerance that I have. If you see your portfolio red for 2 weeks, you might start sweating bullets, right? So our risk tolerance is different. So that's the very first thing I do when I'm deciding what to invest in. It depends on my risk tolerance. The second thing I do is I do what's called a fundamental analysis. And that's also something else that I go into more detail in my coaching program. And when I decide that, okay, I want this ETF, then the next thing to decide is how many shares I want to own and how much I want to contribute into that ETF. And I put it in what's called my investment action plan. All of my clients have an investment action plan, and that action plan becomes their Bible, their investment Bible that outlines all the rules of why they're investing and how they're going to get from where they are to where they want to be. We outline everything in the investment action plan so they can achieve the goal, because the whole purpose of investing is to achieve some ultimate goal. So I hope that answers the question. But the very first thing I do is determine what my risk tolerance is. And an ETF could be a great performer, but if it's not aligned with my risk tolerance, I won't touch it. I don't care how great it performs, because something can move really fast up, but it can also move really fast going in the other direction. And if it doesn't fit my risk tolerance, I want no parts of it. No parts of it. Let's see. Finding Five. That's another new name. Hey, girl. Hey. Is your risk tolerance generally more or less risky than the S&P 500? My risk tolerance is significantly higher than the S&P 500. Yes. Yes, yes. Let's see. Let's see. HSA every year for the max. Nice. That's a good savings rate. A good savings rate will help you get to 5 sooner. L is in the comments doing it, y'all. Hey, everyone, join late. Hey, Greta King. Got it. Thank you for the clarification. Confusing FSA with HSA. Yep, yep, yep. Great to know about Fidelity and the self-managed self-managed HSA. Need to ask Schwab about that. I'm not sure if Schwab does not charge any fees. That's the most important thing you need to ask about, if they have any monthly maintenance fees. Can anyone open a, another good question, Nina. You coming with the heat tonight. I love it. Can anyone open a self-managed HSA? Yes. Yes. In order to contribute to an HSA, you are required by the IRS to also have a high deductible health plan. But if you decide to change your HDHP to a regular HMO 1 year and you already have money in an HSA, that money is still yours. So you can do whatever you want with it. And yes, anyone can open a self-managed HSA. And I like Fidelity for the HSA specifically, again, because they do not charge a monthly maintenance fee. Yes. Mm. Need to predict the market will go up or down. No, ma'am. No, ma'am. I don't do those types of predictions. I don't do those types of predictions. There are experts or quasi experts that do predictions all the time. Sometimes they're right and sometimes they're wrong. Even an expert can be wrong. So I don't do predictions at all. Look at Simone B coming up with, I clicked on the wrong. I missed the comment. Oh, Simone, I was getting ready to highlight your comment about the tech sector. I don't know what I did with it. Have a non-retirement mutual fund. Oh, this looks like a interesting comment. I have a non-retirement mutual fund for years, and it's been in the red more than in the green. See? Risk tolerance. That's why that's the first thing I do. Risk tolerance. And fundamental analysis. Why did you choose that mutual fund? Did you do any type of analysis before you chose that fund? How do you know what mutual funds to choose? That's similar to the question I just answered, I think, about how I choose a mutual fund. I determine my risk tolerance first. That will determine what I want to invest in. And when you log into your brokerage account and you put in the ticker symbol, so these ticker symbols that you all are seeing, like the SCHD, VINIX, those are ticker symbols that are like little mini acronyms to represent what you're investing in. And you put the ticker symbol into your brokerage account, they will give you all the data about that fund, and they will tell you what the volatility is, how risky it is, the historical performance over the past year, year to date, 3 years, 5 years, 10 years, or the maximum since inception. Your brokerage will tell you all of that information. So I decide what to choose, what to invest in based on my risk tolerance, based on my analysis of it, based on several things when I'm doing a fundamental analysis of a fund and an analysis of a stock. In the Invest with Ease coaching program, which I'm going to get to in a minute to tell y'all about that, in coaching, I do show you how to do those things. I have used a target fund for my 401k. I thought I said VINIX. I have no idea what that is, though, but I'm going to look it up real quick and then see if there was a question. VINIX. What's that? Vanguard Institutional Index Fund, Institutional Shares. Okay. So I used to have a target fund for my 401k, but changed it to VINIX, which is an index fund that tracks the S&P 500. It was the best decision I made. Okay. I love it. I love it. If that was the best decision you made, I love it. Yeah. Target funds are good for people that want to set it and forget it. I'm not a set it and forget it person. I'm got a little control freak in me, so I'm not a set it and forget it person. In fact, I'm actually a more active investor now that I've learned more about the stock market. But target funds are good for people that want to set it and forget it. And basically, what it does is, let's say you are planning to retire in 2050. So you choose a 2050 target fund. So the further you are away from retirement, the more risky the asset allocation is, meaning the equities that are inside that fund. The higher the risk, the higher the volatility, but also the higher the potential return. And I emphasize potential because it can go up really fast and go down really fast. But the closer you get to your target retirement date, it automatically, so you don't have to do anything, it automatically shifts from the more risky, more volatile asset mix, and it gradually starts shifting to more asset preservation asset mix, where you're probably more in bonds and less in equities. So you're not experiencing the volatility, you're not experiencing a lot of the highs and the lows. But when you are in asset preservation mode, not only does your portfolio is your portfolio shielded from the downs of the market, it's also not growing anymore either. So a target fund basically manages the asset allocation for you based on the target date that you give it, that you'll potentially retire. So you moved it out of that target fund and into VINIX, and you love that. I love that for you, sis. I love it for you. Let's see. Trey says, it's P. I must have missed some of this conversation. Sorry, y'all, I'm missing some of the comments. I have a financial advisor with Prudential that I've had for years now. I'm trying to educate myself so I can keep on top of things so I can fire. Okay, I see you, sis. I have some thoughts about financial advisors that I won't get into tonight. Maybe another video for that. But I'll just say this. Never, ever, ever, ever let anybody know more about your money than you do. Okay? Yes. I think I answered all of the questions. But before we wrap up, I do want to open this invitation to you. So if you desire financial independence, I teach my investing strategy in the Invest with Ease group coaching program. You guys have heard me mention that before, but I always say, but it isn't open for enrollment because I only teach 4 times a year. I only teach 4 times a year, and Invest with Ease is now open for enrollment. In Invest with Ease, I teach my investing strategy. I also teach my students how to manage risk and limit losses. Because remember, in investing, risk is an inherent part of investing. I don't want you to be all willy nilly investing and losing your hard earned money instead of creating money babies. So I also teach my students how I set up my asset allocation so that I can grow, and how I have grown my portfolio consistently year after year after year for the past, what, two decades? But Invest with Ease is open for enrollment. I am going to share the link in the comments for anyone who is interested in enrolling. If you enroll today, you will see that there is a nice little bonus offer that's available. But I just dropped the link in the comments for those who want to apply to enroll. I forgot to share that too. I have an application process because Invest with Ease is not for everyone. Based on my experience over the years, based on what I've learned, based on what I have observed about my most successful clients, I have structured my program and I continue to improve it every quarter that I open enrollment to serve what I consider people who are ready to learn and ready to apply what they've learned. So when I say Invest with Ease is not for everybody, it's by design. Who is Invest with Ease for? Number one, you have to be coachable. You have to be coachable. If you are already investing and if you think you know everything, and if you want to challenge everything that I'm sharing with you or everything that I suggest, Invest with Ease is not for you. I'm already financially free. I don't have to prove anything to anybody. In Invest with Ease, I share my strategy. I share everything I know. I coach you through your challenges. I help to answer your unique questions because I coach and I teach live. This is not a pre-recorded thing. In the future, it might be pre-recorded, but it's not pre-recorded now. I teach it totally live. So, Invest with Ease is designed for people who are coachable. You have to have an open mind. You have to be willing to learn. You have to be open enough to consider a different way of thinking. Even if you've already been investing, you might have been investing willy nilly and don't really know what you're doing. You can still enroll and invest with ease, but you have to be coachable and have an open mind so you can consider a different way of doing things, an easier way of doing things. In fact, I had a client in my last cohort that was a trader. I won't say was, she is a trader. So she had already been investing, she had already been trading. But after taking my Invest with Ease program, she told me that my way of investing relieved her of so much stress. It relieved her of so much pressure because the way she was doing things was so complicated. But the reason why she was able to receive what I was teaching is because she was open minded. She didn't come in with preconceived notions. I already know how to do that. She was open minded, and I filled in a lot of gaps for her. And she learned a new way of doing things. And that's what she loved about the program. In fact, you may meet her in a future video coming soon. We'll see. But the second thing is you have to have a consistent source of income to invest. You need money to create money babies. You need money to create money babies. So if you do not have a consistent source of income, Invest with Ease may not be for you. The 4 steps that I just shared, you may be able to start there. And when you establish a more consistent source of income, then the next time I open Invest with Ease for enrollment, that may be the time for you then. But if you do not have a consistent source of income, now would not be the time for you. I do not coach because I want everybody to enroll and because I need to make money. That's not why I coach. I coach because I want to help more Black women achieve financial independence. And the way I have designed my program is to help you succeed. So when I say it isn't for everybody, it's for the people I know I can help succeed. Okay? So having a consistent source of income. The next thing is ready to commit the time and the effort to learn a life changing skill. That's so important because Invest with Ease is 8 weeks. That's a long time. You have to be ready to commit the time and the effort. Investing changed my life. Investing changed my life. And I have no doubt that investing can change your life too if you show up for yourself and you do the work. My program is not a program where you just come in and you watch some videos and you do it at your own pace and you might finish, you might not. I am a coach, not a teacher. I want to be clear. I am a coach. So what you bring to the program, what you give me to work with, I can serve you better. I can take what you give me and help to make you better. But if you don't show up, I can't help you. If you don't do the work, I can't help you. I'm not a teacher, I'm a coach. I coach you to success, but you have to show up and do the work. I make it as simple as possible for you to learn. I hold your hand while you're implementing what you're learning, but you have to do the work. So if you're not ready to commit the time and the effort to learn a life changing skill, Invest with Ease right now may not be for you. And the last thing, you must have the means to invest in coaching. Like I said, I teach live. I teach live. I teach live for 8 weeks. So Invest with Ease is not cheap. It's not a cheap bargain basement program. It's also not ridiculously expensive either. But I'll tell you, it's a four-figure investment. It's a four-figure investment. It's an investment that is something that's like any other investment. An investment into your investment in your stock portfolio. An investment is something that requires you to put money in one time and it gives you a return that pays you back your money and continues to pay you over and over and over again for the rest of your life. Invest with Ease is no different. So it is an investment. So you must have the means to be able to invest in coaching. If you don't have the means, that's okay. I just gave you 4 tips for how you can get started right now anyway. You don't need coaching to get started. But if you want my more detailed strategy, if you want to know how to manage risk so you can limit losses, if you want to know how I've grown my portfolio consistently over the years, so here in my 40s, I am able to live 100% off of my passive income. That's what I teach. That's what I coach you through in the program, right? Are there any questions about investing in general, my financial journey, or the Invest with Ease program? And if everything I shared sounds like your vibe and you want to level up your finances in 2024, I invite you to join us in the next cohort. The next cohort, what were the dates? What were the dates? The kickoff meeting with everyone that enrolls is going to be on January 23rd. We're going to have a kickoff meeting, and then coaching will actually begin on January 30th. So the 23rd and the 30th are important dates. And I will share this link one more time. Oh, it's still up on the screen. Let's see. Oh, I see some cues that I missed. I'm sorry, y'all. I didn't know you were still posting cues. Hold on. There's the link again. If you would like to apply to enroll. And the application process is just asking questions about your personal finances, asking questions about what you need, what you expect to receive from coaching, because I want to make sure that this coaching program is a good fit for you. I don't want you to enroll in something that's not going to meet your needs. I don't want you to pay your hard-earned money to enroll in something and you walk away at the end of the 8 weeks and like, I ain't learned nothing. I want to make sure it's a good fit. So that's why I have the application process now. I see a question about the scholarship. Will you have any scholarship opportunities for future courses? Great question. Yes. In fact, I've shared this before, but I'll share it again. One of the students in the previous cohort, she loved it so much, and she asked the same question, and she also wanted to contribute to a fund that can support scholarships for future enrollees because she said everyone needs this program. And that is why I created the YouTube membership. I didn't want to just take like donation money from people without having something to give you back in return. So I created the YouTube membership, and the VIP level of the membership. I meet with those members once a month and I pull back the curtains on my personal finances. So in exchange for your donation, I share more about my personal finances and I also answer the deeper questions that I won't answer publicly. But yes, so as those funds build up, I will use those funds to offer scholarships. But I just started the membership. it hasn't even been a month yet, maybe 2 weeks ago. I just started the membership. So if you would like to donate to the scholarship fund, you can click that join button that's right below this video somewhere. Click that join button, and there are 2 levels of membership. All the funds go towards the scholarship fund. Also, the merch that's in my YouTube storefront, all of those funds also go towards the scholarship fund. So it's like you donating, but you're getting something back for your donation, if that makes sense, right? So I still want to be giving in every way, but the funds that come from the merch store, which all of you that place orders, thank you so much. I appreciate you. I saw some orders come through over the past week or so. I just started both of them about 2 weeks ago. But all the funds from the merch store and all the funds from the membership will go towards the scholarship fund to support future students and invest with ease. Let's see, what is Simone saying? Error expense fee. I'm not part of Malika's program, but I think it's something to consider. Oh, I missed that conversation. Not sure the context of that. Mini Me on cam. Hey girl, hey, it's a new name. For me, majority of my investments are in my Canadian registered disability savings plan. So what is that equivalent to here in the US? That will be my retirement income that government has made the regulation around it complex. Oh, sorry to hear that. I don't know anything about Canada, sis, so I don't know what that would be equivalent to here in Canada. I mean, here in the United States. Uh, oh, Trey, you asked, not sure what an expense fee is. I will Google that. My tolerance was low when I opened it. I can answer that for you. An expense fee, an expense ratio. Is that what you're asking about? So it's like a fee that's embedded in mutual funds and ETFs, any type of fund that you buy. So for a mutual fund or an ETF that tracks the index, like the S&P 500, the expense ratio should be relatively low because all it does is track the S&P 500. But if you invest in an actively managed ETF, I know a lot of people, when they think ETFs, they're thinking about index funds. There are so many different types of ETFs, so many different types of ETFs. But the more actively managed funds, those expense ratios may be a little higher because the fund manager is actively trading the assets that are in that basket of funds. So that asset manager has to be paid somehow. And the way they're paid is through the expense ratio. So it's not a fee that you pay separately, it's embedded into the asset that you buy, and you will see the fee coming out of your account like every so often. So yeah, it's embedded into the funds that you buy. Let's see. I think I answered that. It might be able account for the United States, but legislation and laws would make it different. I don't even know what an able account is either. I'm sorry. I can't help you with that, sis. I have no idea what an able account is. But if you all have any other questions about investing or about the Invest with Ease program, feel free to drop them in the comments and I will circle back tomorrow and answer all of your questions. But again, if this was helpful to you in any way, now you know where to start. Now you know what to do. Now you know what a mutual fund is. Now you know what to consider when you're buying a mutual fund. All the questions I answered for you. If this was helpful in any way, please share this video. Share this video with other women you know who desire financial independence, and more specifically, the peace of mind once you've achieved financial independence. Don't gatekeep information. Share it, please. Share the video. The more you share it, it will let YouTube know that this was a pretty good video. And it will also share the video with more people to view it as well. And also smash that like button. I appreciate you when you smash that like button if you haven't already. But If there are no questions, I am going to leave you on that note. So until next time, y'all know what I'm going to say. Continue learning. Continue learning and investing to live what you love. All right. Bye for now.